Live from Paris, this is Bloomberg Daybreak Europe. I'm Lizzie Burden and a very good morning to you. Let's set your agenda. Gaza breakthrough. After 2 long years of war, US President Donald Trump says that Israel and Hamas have both agreed to terms for the release of all hostages held in Gaza. Israel is to withdraw its troops as part of the peace plan. Elsewhere, stocks jump in Asia as China reopens from the Golden Week holiday and as the AI boom extends the Nikkei's run of gains in Japan. Plus, French President Emmanuel Macron says he'll name a new prime minister by tomorrow night after avoiding snap elections for now. We'll bring you live coverage and reaction throughout the hour.
Countries that you wouldn't have even...
Well, a very good morning. Welcome to the programme. We are on the ground in Paris. We await the announcement of the new French Prime Minister from Emmanuel Macron. Another 48-hour deadline set, but checking in on these markets. And just when you thought that that stock rally was wavering, the wind put back in its sails by the dip buyers yesterday. We do have futures pointing lower on both sides of the Atlantic. Pretty flat, actually, stateside, but underperformance set to come for the FTSE 100. This, we can see why from the cross-asset picture. We have oil lower after the US President Donald Trump did say that Israel and Hamas have signed off on phase 1 of a peace deal, just in time, of course, for the Nobel Peace Prize tomorrow. Gold actually paring some of its earlier losses, so only down 0.1% now and still above that $4,000 an ounce level. We did see the euro pairing also some of its losses off the back of Prime Minister Lecornu's speech last night, and the dollar on the flip side ending lower, having approached a 2-month high. Euro dollar now at a 1.16 handle. We have the 10-year US Treasury yield at 4.1210. We await the open of French bonds later on, but of course we did leave the spread against German bunds at 84 basis points yesterday. But let's get back to our top story out of the Middle East now. The US President has announced a deal between Israel and Hamas that could see the release of the remaining hostages by Monday. Prime Minister Benjamin Netanyahu has described it as a great day for Israel, while Hamas said that it valued the efforts of the US President. Donald Trump told Fox News the world had come together.
The whole world came together, to be honest. So many countries that you wouldn't have even thought of it, they came together. The world has come together around this deal. You know, having the ability to deal with trade, having the ability to use tariffs to help me make a point. The tariffs have brought peace to the world.
Let's get more now with our Bloomberg Horizons Middle East and Africa anchor, Germana Bersetchi. Germana, it is the moment we have waited for, a breakthrough. Walk us through the details.
Yeah, absolutely. And I would say not just a diplomatic breakthrough, but also a real human moment. Earlier on, we were looking at live footage of families of these hostages celebrating at Hostage Square in Tel Aviv, footage of Palestinians cheering in the streets. They've been waiting for this moment for 2 years now. This has been an absolutely devastating war and following the attacks of October 7, 2023, which really did change the face of the region. There have been multiple attempts to get towards a lasting ceasefire. This is the best chance we have seen, the biggest diplomatic breakthrough. And indeed, a lot of that is because of the work and effort that President Trump, alongside the Arab mediators and other mediators in the region, put into getting this deal across the line. Now, I would just say that at this point, it is still just phase 1. It is the first part of the full 20-point Gaza plan that was released last week that would entail the release of hostages. And President Trump, in the Truth Social post that he put up, did suggest that Israel had agreed to withdraw to a pre-agreed line. But we still don't have details on where that withdrawal point is. Also, no mention of disarmament, Hamas disarmament, how that will be enforced, and what the longer-term question about governance and rebuilding and reconstruction of Gaza is going to look like. So still very much phase one of this ceasefire deal. In terms of next steps, President Trump has said that the hostages should be released by Monday. He said that in an interview with Fox News. He said that he also may come to the region himself. Yesterday, the Egyptian President Sisi, did say, extend an invitation to President Trump, saying that if the deal does get signed, he should come to the signing ceremony in Egypt. And then he's also been offered to speak at the Knesset in Israel next week as well. So we may be seeing President Trump come to the region. But again, just to recap, a huge moment in this part of the world. And more than anything, Lizzie, a real human moment, and one perhaps that offers cautious optimism about the state of peace and the long-term path towards peace in this region.
Absolute jubilation, Germana, after so much tragedy. But just how much of a personal, pivotal role did President Donald Trump play in getting this deal across the line?
Well, certainly the last couple of weeks have seen a concerted effort by the Trump administration, by Trump himself, who seems to be personally vested in getting a deal across the line. Many people have pointed to the fact that the Nobel Peace Prize nominees will be announced tomorrow. The winner of the Nobel Peace Prize will be announced tomorrow. Irrespective of that, he seems to have invested a lot in this personally. He wants to be seen as the only U.S. president that is able to get peace across the line. He, of course, helped broker the Abraham Accords in his first term, and he's talked repeatedly about his desire to have more countries join in to this Abraham Accords, bring broader peace to the region as well. So this has been a personal point of focus for him. But I would just say as well that Arab states themselves have angled and have really stepped up their participation in this process. You may recall that on the sidelines of the UN General Assembly, President Trump sat down with some of those major leaders, and it was only after that discussion that this 20-point plan was released. He made sure that Arab states were also participating in this, and there's been plenty of press written about the fact that he was very incensed after the Israeli attack on Doha took place. And that sort of galvanized him to move towards ending the conflict in some shape or some format, because he sensed that it was getting a bit out of control. And so the focus over the last couple of weeks is very much representative of a U.S. president that wants to see an end to the war. Now, the big question is, will that focus continue once the first phase is over, and will there continue to be international community support around some of those more trickier and longer-term questions about the future of Gaza?
A historic moment for now. Bloomberg's Horizons Middle East and Africa anchor, Germana Bersetchi, we thank you so much for your coverage, and we'll get back to you later in the hour. To our top story here in Europe, though, here in Paris, where French President Emmanuel Macron has said that he'll name a new prime minister by tomorrow evening. This after outgoing Premier Sebastien Lecornu, who was tasked by Macron with negotiating with rival political groups, said that sufficient progress had been made to allow work to begin on forming a new cabinet.
What I can say tonight, after my discussions, is there is an absolute majority in the National Assembly which refuses a new dissolution. I feel a narrow path is still possible. It's difficult. But I told the President of the Republic the prospects of new snap legislative elections are receding. And I think the situation allows for the appointment of a new Prime Minister within the next 48 hours.
For more Bloomberg Economics, Jean Dalbach joins me now in Paris. Good morning.
Good morning
to you. I wonder why a new Prime Minister will succeed and last when three others have failed, Jean.
This is actually the key question, and yesterday evening the outgoing Prime Minister was looking pretty optimistic on national TV, but we would be cautious. There were no major breakthrough yesterday evening, and effectively President Macron can appoint a new Prime Minister these days, but he will face the same situation that has led to the collapse of the previous governments from Mr. Bayrou and Mr. Lecornu. On the ground, the situation remains unchanged. The parliament is fragmented, and political parties are pretty unwilling willing to compromise. So all in all, we would see a really narrow path for a budget to get passed this year.
Yeah, so Lecornu reiterated yesterday that France has margin for less ambitious budget cuts than planned, as long as that gap still falls below 5% of economic output next year. If the socialists' price of cooperation is pension reform and maybe some other tax hikes, is that going to be possible, Jean?
I think it would be possible, but it is like a classic trade-off between short-term and long-term priorities. Short-term priorities for the country is to get a budget passed because it will kick off consumer spending, firms investing, while the long-term priority remains for the country to reform its pension system. And I don't see a world where it would not be like at the center of the presidential election campaign in 2027.
And you used to work on financial stability issues at the French Treasury, so we're very lucky to have your analysis here on Bloomberg. How do you think that the market is going to react to this latest turn of events today?
It will probably react positively because this is something like positive for the spread, I guess, to have a budget pass. I guess it's a priority for the market at the moment. But if we take a step back, this is just another episode of a political crisis, and this is not at all a financial crisis, nor a debt crisis, and not even an economic crisis.
Just a political
at least
crisis.
Yes, at the moment, yes.
A very long one.
Yes.
Jean, thank you so much for that analysis. Jean Dalbao from Bloomberg Economics, and Jean will be back with us again later in the hour. But our coverage of the French political crisis continues throughout the day as well. These are just some of the guests that we'll be speaking to over the next few hours. You can see on the screen here, including the French Socialist Party MP Arthur de la Porte. So we look forward to hearing what the socialists want out of this new situation. Let's get back to the markets now. Wall Street closing at another record high yesterday, helped by further gains for companies linked to the artificial intelligence boom. This, as we learned overnight, that the US has approved several $1 billion worth of Nvidia chip exports to the United Arab Emirates. Let's bring in Bloomberg's Valerie Teitel for more now. Val, the markets seem to have muted the US government shutdown noise. The stock rally powering ahead yesterday as traders bought that dip.
Yeah, that's right, Lizzie. The Nasdaq having its best session in 7 weeks yesterday, closing up 1.2%. There were some phenomenal moves behind it. Take a look at AMD behind me. Risen 11% in Wednesday's session, has now taken its 3-day gain over 40% since it signed that pact with OpenAI to deliver chips, to deliver computing capacity in their chips. It was really interesting that this tech rally had such a momentum yesterday, even though we had Fed minutes that were out in yesterday's session that were slightly hawkish. The Fed minutes had a hawkish tone, and they showed that many members are still worried about inflation and are cautious about cutting too quickly in the face of that. A majority of them actually did cite upside risk to inflation as a reason to remain cautious around cuts. Now, Lizzie, you have to start asking yourselves, when perhaps will central banks be warning that perhaps the Fed shouldn't be cutting this aggressively because of the AI frenzy and the heightened valuations behind it? That's exactly what we heard from the Bank of England yesterday, warning that AI valuations are setting ourselves up for perhaps a sharp correction in the equity market. And these Fed cuts that have been priced into the curve are adding fuel to that AI frenzy. Most did agree that they will be lowering interest rates a few more times this year. That does chime with what we heard in the dot plot from that meeting. But really, regardless of where this risk lies, many are still looking at gold as the safe haven asset of the day. It has pulled back from record highs in today's session, but just slightly. We're down 0.1%, Lizzie, on the yellow metal. It reached 4,050 in the session yesterday, so we're just slightly off of record highs, but in the red today.
All right, Bloomberg's Valerie Teitel, we thank you so much for that update on the markets. And of course, the market that is open right now is Asia. The risk-on mood extending from Wall Street to Asia as the Chinese market comes back from the Golden Week holiday. Bloomberg's China correspondent Min Min Lo joins us now for more. Min Min, what are you watching where you are?
Hey, Lizzie. Yes, China is coming back with a big bang after the Golden Week holiday. You can see onshore markets surging 1.6%. The Hang Seng just faring, about 0.3% higher. It's a tale of two stories here because obviously we are keeping an eye on the Golden Week travel data, which is looking a little bit tepid. I'll get to that in a moment. But so far, investors are looking past that, and it's a big catch-up rally. The tech rally that China missed out on last week, the metals rally as well. So these are the two biggest gainers, the tech index and the materials sub-index of the CSI 300. That's surging by about 6% today. And you flip the board, take a look at the mining stocks in particular. We're looking at limit up 10% higher on Jiangxi Copper, Shandong Gold. A number of these stocks surging 9-10% today after missing out on the rally last week. It's a beneficiary of the AI euphoria, right? Because there's demand for these rare earths that are needed to build out AI data centers and AI-powered electronics. You add to that the news from China this morning that the government is tightening further export controls on rare earths as well as chips for certain R&D sectors. So again, that's another reason to push up some of the stock prices of the rare earth sector as well. But flip the board, take a look at the contrast we are seeing in the travel sector though. And like media, that's a film industry down by 10%. The hotels, the airlines all pointing down today. And again, this is part of because of the weak data we got out of Golden Week. You look at the box office data, if you flip the board, you can see we're looking at about 1.8 billion yuan in box office numbers in 2025. This is falling short of the 2024 numbers, and that is despite the longer holiday we got this year, 8 days instead of 7 days, because it was combined with Mid-Autumn Festival as well. And certainly falling far short of where we were a few years ago between 2019 to 2021. The same thing for catering and retail numbers. We're looking at about 3% higher in the first half of Golden Week. That is half of the gains that we saw on year during the Labor Day holiday earlier this year as well. Last thing I want to talk about, if you flip the board, is the Hang Seng Bank. We are seeing a big surge, 26% up, the biggest gain on record since the Hang Seng Bank started trading 40 years ago. This is because HSBC has announced it's proposing to buy out Hang Seng Bank, to privatize it, paying a premium of about 30% above its last close price yesterday. So they're offering 155 Hong Kong dollars a share. We are close to that now, and Hang Seng HSBC just going the opposite direction, down about 6.8%.
Bloomberg's Min Min Lo in Hong Kong. We thank you so much for that update. And we're going to stay on that story later in the programme. HSBC, as Min Min says, planning to take its Hong Kong subsidiary private, valuing Hang Seng Bank at around $37 billion. We'll bring you an exclusive interview with HSBC's CEO on that big move. Plus, Invisible Technologies claims to have trained more than 80% of the world's top AI models. And as the startup raises $100 million in growth capital, we're going to speak to the CEO. So that conversation also coming up later this hour. Stay with us. This is Bloomberg. HSBC is to take Hang Seng Bank private in a deal that values the lender at $37 billion. Speaking to us exclusively, CEO George Elderi says that the decision is about growth and a vote of confidence in Hong Kong, and nothing to do with the unit's real estate debt.
This is an investment for growth. This is an investment in Hong Kong, one of our home markets and one of our key markets. Hang Seng is an iconic brand in Hong Kong. It's a leading local bank. It has a fantastic customer franchise, have a very strong financial position. It has a cultural distinctiveness. And the idea here is to effectively take private Hang Seng by retaining its distinctive customer franchise, by retaining its branch network, its own customer proposition, and obviously its iconic brand in Hong Kong, and its heritage and culture more than or around 100 years in Hong Kong.
The bank already owned a majority of this unit before the transactions. I'm curious, what does this transaction now enable you to do that perhaps you were not in as good a position before the transaction came through?
So, David, a couple of things. First, it allows us to enhance all the capabilities of Hang Seng. So we will be able, as I said, it's an investment for growth. We will be able to offer existing customers of Hang Seng, as well as all new customers of Hang Seng, a wider range of products empowered by the HSBC product suite, such as capital markets for the corporate customers, or such as wealth products for the retail customers. It allows us also to give access to Hang Seng customers to our international network in a way that they wouldn't have access before. It allows us to enhance all these capabilities by scaling investments in technology, scaling investment in product manufacturing, scaling investment in innovation. That's one. And the other one, it allows better alignment between HSBC and Hang Seng. This alignment will allow us to drive a number of synergies and other efficiencies, which we expect to achieve over time.
Did bad debt play any part in the thinking behind this decision? Because a few weeks ago we were reporting here at Bloomberg about how HSBC had been asking Hang Seng to clean up some of its bad debt, and we were hearing that Hang Seng as well was in the process of divesting some of its portfolios. So was that part of the rationale as well?
So, Annabelle, this has nothing to do with the, bad debt situation. It's very much an investment for growth. This is a medium to long-term investment for HSBC in what is a fantastic brand in Hong Kong, in the market, Hong Kong itself, in a market where growth has been very strong. It demonstrates through this significant investment, it demonstrates our commitment to the economy of Hong Kong. It demonstrates our conviction in the future outlook of Hong Kong. And it demonstrates the appetite we have to continue enhancing the capabilities of Hang Seng for the medium to long term.
That's an interesting point you made there, Georges, on you want to retain the Hang Seng Bank identity. So just to ask you, there's no merger of the Hang Seng Bank unit will remain as is. In other words, Hang Seng Bank clients will remain Hang Seng Bank clients, and they won't be folded under HSBC.
That's absolutely correct. So what happens is this is a take private. This is not a takeover. Right? Okay. In the take private, you retain the Hang Seng brand. You retain the Hang Seng authorized entity under the Hong Kong Banking Ordinance as a licensed bank. You retain its customer proposition, covering as a leading local bank, covering retail customers and commercial banking customers in Hong Kong. You retain its governance, its board, and obviously for customers, the day-to-day doesn't change. The increased capabilities will come over time, and they will benefit from it.
You have made some changes recently to the top leadership at Hang Seng as well, but do you plan any further reshuffles there or any sort of headcount reductions?
So in terms of leadership, this obviously will be a matter for the Hang Seng board and the incoming CEO to decide, but we have a strong leadership in Hang Seng that's been throughout, and as you know, HSBC, Hang Seng is part of the HSBC family. HSBC has been very actively engaged with Hang Seng throughout the last 60 years. With regards headcount, our plan is to continue invest in people in Hong Kong. We want to continue to invest in people, and we want to continue to invest in technology in Hong Kong. We believe this privatization proposal will give our colleagues, specifically our colleagues across Hang Seng, further opportunities for career development, further opportunities for training, and further ability to give talent opportunities within Hong Kong and outside Hong Kong.
The HSBC CEO, George El-Hadary, speaking exclusively to the China show there. We'll have plenty more for you live from Paris. This is Bloomberg. Now, an update on Keir Starmer's trip to India. The UK Prime Minister has met with a key architect of India's digital ID programme as the British Prime Minister seeks guidance on implementing a similar system in the UK. Starmer spoke with the co-founder of Infosys, who's widely credited with implementing India's unique ID card in 2009 as part of the Prime Minister's two-day visit to Mumbai. And Graphcore, the British chip designer owned by Softbank, is planning to unveil a £1 billion investment package in India that includes a new research hub. Bloomberg understands the announcement is scheduled as part of a delegation of UK businesses joining Keir Starmer in India this week. Well, coming up on the programme, Donald Trump hails a deal between Israel and Hamas as the first step towards peace. Details next. This is Bloomberg. Live from Paris, this is Bloomberg Daybreak Europe. I'm Lizzie Burden and a very good morning to you. Let's set your agenda. Gaza breakthrough. After 2 long years of war, US President Donald Trump says that Israel and Hamas have both agreed to terms for the release of all hostages held in Gaza. Israel is to withdraw its troops as part of the peace plan. Elsewhere, stocks jump in Asia as China reopens from the Golden Week holiday and as the AI boom extends the Nikkei's run of gains in Japan. Plus, French President Emmanuel Macron says that he'll name a new Prime Minister by tomorrow night after avoiding snap elections for now. We'll bring you live coverage and reaction throughout the hour. Well, welcome to the programme if you are just joining us. And we're looking at futures pointing a touch lower on both sides of the Atlantic. But if you were worried that this stock rally had lost steam, actually the dip buyers put the wind back in its sails yesterday, despite the warning from the Bank of England that this is something to be wary of. It looks like we're going to see underperformance from FTSE 100 futures. They're currently down 0.4%. And flip the board over, you can see why in the cross-asset picture. We have oil lower this morning. Brent at $66 a barrel, down 0.3%, off the back of that news out of the Middle East. President Trump saying that Israel and Hamas have signed off on a phase one deal, peace deal, just in time, of course, for that Nobel Peace Prize. But we have gold actually pairing some of its earlier losses now, so trading pretty flat at the moment, still above that $4,000 a troy ounce level. Euro dollar at a 116 handle. We did see the euro pairing some of its own losses off the back of Prime Minister Lecornu's speech last night, and the 10-year US Treasury yield there at 4.1268. Of course, we await the French bond open for the reaction to Lecornu's speech, but we left the spread against Bunds yesterday at 84 basis points. But let's get back to our top story now. Out of the Middle East, the US president says that he may travel to the region this weekend after a deal was reached between Israel and Hamas for all remaining hostages in Gaza to be released. Trump says that they could be freed as soon as Monday, with Israel releasing almost 2,000 Palestinian prisoners in return. It's part of a wider deal towards ending the 2-year war. Now, Bloomberg's Horizons Middle East and Africa anchor Jumana Basecci joins me again. And Jumana, for anyone just tuning in, walk us through these historic details.
It is a historic moment and indeed a great diplomatic breakthrough. You were just showing footage there of some of the families of the hostages celebrating in Tel Aviv in Hostage Square. The war has been going on for more than 2 years now, a war of devastating magnitude. There's a sense of exhaustion and a real amount of destruction, in addition to the vast humanitarian toll that the war has taken on Gaza over the last couple of years. So a feeling of relief really prevailing in the region today. President Trump overnight posting to Truth Social that both sides, Israel and Hamas, had agreed to sign on to the first phase of his 20-point Gaza plan. And that would entail the release of the hostages. There are 20 hostages thought to still be presumed alive. Another 28 remains deceased also will be handed back in exchange for Palestinian prisoners. So that is the first part of the peace deal that has been agreed to. After that, there will be a passage of humanitarian aid. But what is still at question here, Lizzie, some of those longer-term questions regarding the extent of the Israeli IDF withdrawal from the Gaza Strip. Currently, IDF still occupied control around 70% of the Strip. In that Truth Social post, President Trump did suggest that they had agreed to pull back to a pre-agreed line. What that line is, we still don't know. Another question about the extent of Hamas demilitarization. how far they're going to go along the lines of putting down their weapons and who exactly will be enforcing the demilitarization of Hamas. And then finally, questions around the future governance of the Gaza Strip, the involvement of the international community, and of course that board of peace that President Trump referred to when he made the announcement about the 20-point plan about a week ago. So we're still in the early innings of what could be a long, drawn-out process towards what could be eventual peace in the region. President Trump sounds optimistic, and indeed, even the Israeli Prime Minister today saying that this is a big moment, is a great day for Israel. The Knesset are looking to ratify the deal later today, and then there is reporting that the ceasefire will go into effect as soon as midday local time. One final point to note, yesterday the Egyptian President Sisi extended an invitation to President Trump to come to the region. President Trump floated the idea of coming to the Middle East as soon as next week, so he may also come to the region for the official ratification of the deal.
Okay, Bloomberg Horizon's Middle East and Africa anchor, Jomana Basechi, we thank you so much for that coverage, and we look ahead to the implementation of this peace deal and that potential visit from President Trump to the region. But let's get back to the latest here in Paris, where outgoing Prime Minister Sebastien Lecornu refused to be drawn on whether a new Prime Minister would likely come from Macron's centrist supporters or might be a Prime Minister from the left. He did emphasise, though, that there was a majority in Parliament in favour of avoiding a new legislative election. I'm joined now for analysis of the market impact by Lauren Goodwin, economist and chief market strategist over at New York Life Investments. And good morning, Lauren. Thank you so much for joining us. I wonder what market reaction you would expect if the price of the socialists' cooperation is full suspension of Macron's pension reform.
Well, taking from a U.S. or global investors' perspective, markets have largely digested the reality that French financial consolidation and the political system are not necessarily two and the same. And so our expectation that we would see a major market reaction with a wide range of credit spreads is actually more muted than the market average. We're anticipating that we would see some market volatility, but in the context of a global backdrop where debt sustainability is becoming a challenge, not just in France, but in many countries across the world, including other developed markets like Japan, the UK, the United States. This is the beginning of a longer term and more global trend from our perspective.
Yeah, it was interesting. I was speaking to our Bloomberg economist, Jean Delbar, earlier, talking about how this really still is a political crisis. It isn't expanding into an economic or fiscal crisis just yet. And really, the bond market seeming quite nonchalant about it. And really, if we looked at the European stock reaction yesterday, lots of optimism, actually, about this new Hail Mary from Emmanuel Macron. I do wonder, though, Lauren, is it possible for European stocks to break out of the range that they've been stuck in before the end of the year?
I think it is possible. Starting with France, for example, there are challenges related to what the future for government spending and exports might be, especially with a German market that's a bit more uncertain. But we can't forget that Europe as a whole has been benefiting from a much quicker and more consistent interest rate cutting cycle. And we see some of the real beneficiaries of that trend in industrials, financials, luxury items, continuing to benefit from that really important macroeconomic backdrop. Now, do I think that European equities will continue to outperform other parts of global equities like the U.S. or Japanese equities? Perhaps not, but that doesn't mean we can't see some revival in the global economic sort of support for the European equity market.
Well, on that point, the Bank of England has just warned yesterday about the possibility of a sharp market correction because of stretched valuations when it comes to AI. Do you share that worry? It sounds like they think there could be a bubble here.
I think all investors share that concern that even though we and many others believe that the trends supporting AI and the infrastructure build around AI are real, they're here to stay, that in the near term you could see a market correction really at any given time. Our perspective on this is that the AI sort of uptick in valuations isn't over until the hyperscalers say that it's over. One of the concerns that we've seen more and more, and I think is a relevant concern, is the circularity of the purchase purchases and production of the chip makers and the metadata structure and algorithm companies that are starting to become more apparent. In the medium and longer term, thinking about a correction, I think, is reasonable. It's rational, especially for investors that have, over the last 15 years, experienced major boom and bust cycles, major external events. And so considering the diversification or the portfolio allocation approaches that can shield a portfolio, I think are relevant. One of the things that we're seeing investors do more and more, especially in our institutional client set, is to consider what high valuations but high earnings and high potential out of AI stocks in particular might mean for the rest of a portfolio. In some cases, that means taking smaller equity exposure in not just small caps, but in private equity in the truly Main Street sort of areas of the global economy. We're also seeing investors, not just for geopolitical reasons, but for AI reasons as well, start to close underweights to European equity as a result of those valuations.
Mm-hmm. Okay, really interesting. So perhaps broadening out and being more selective. Lauren Goodwin, Chief Market Strategist at New York Life Investments. Always good to get your insights on the programme. We thank you so much. Well, coming up, the CEO of Invisible Technologies will join us on how they're, quote, redefining the AI era after raising $100 million in growth capital. That conversation next. This is Bloomberg. Welcome back to Paris, where French President Emmanuel Macron has said that he'll name a new Prime Minister by tomorrow evening. And I'm joined for analysis now by Douglas Yates, Professor of International Relations at the American Graduate School right here in Paris. Thank you so much for joining me, Douglas. We've got another Hail Mary coming from President Macron. We await a name within 48 hours. Do you think it's going to be the same situation, just a different name in the chair?
Well, yeah, so far it's been like musical chairs. Yeah. It's an excellent description. Yes, I think that there's going to be some similarities in that the challenge will be for the Prime Minister, who will probably be one of the leading socialists, maybe even Faure, to build a centrist coalition, because the two extreme parties, the extreme right and the extreme left, have said they will censure any government he names. They want elections.
But is Macron going to lose the centre if the price of that cooperation is suspending pension reform?
But that's what's so interesting, because Elizabeth Borne made an announcement that she's willing to let go, and everyone understands that was with Macron's approval. So the fresh meat that he has offered the socialists to bring them to the table is one of their phare projet. It's one of the things they want most, which is to stop pension reform. This will have an effect on markets, but it will allow him to negotiate with the 5 parties of the left who are not on the extreme left. Each of them has about 10%.
But if they don't just want the pension reform to be suspended, if they perhaps also want tax hikes as well, how do you get that past the market? How do you fund that and make it work politically?
And it wouldn't work politically. So right now, Les Républicains are in anger. If you watch them on the late night shows, every one of them who comes on these platforms with 7 or 8 party members screams this is the most irresponsible thing ever. And they even blame their own party members. They blame Macron. They're almost like an opposition party. They won't join on everything. But what they might do, what Les Républicains might do, is not censure the motion. That's the bare minimum that a government of the left would need. That Les Républicains maybe don't support the project, but they won't censor it. So it's a very thin margin. And if the socialists or if any of the coalition partners on the left start demanding more, then we will be meeting again. But I don't think in a few weeks.
Well, I mean, it's the same question that we have in the UK. How do you have a more left-wing government and deficit control? It's the conundrum that we see around the world. But the other question I want to ask you is, Lecornu says that whoever is the next Prime Minister must not have eyes on being president in 2027. Is that realistic? He says it's the elephant in the room.
It's absolutely every one of the parties is planning on presenting their candidate in the first round of the presidential elections. So much so that some of these parties are confused. The question now is not who's going to be president, but they're speaking for that future election. And so he's trying to encourage them to do the right thing. Looking from the outside, France needs a budget. Its lending rates are going high. But here from the inside, that's not clear. When you say to French voters, your borrowing rates are going high, they don't hear you because they're very much enmeshed in the culture wars and in their wars over retirement, over immigration, over other things. And the fiscal responsibility isn't the voters' interest. And so when the politicians are speaking, they don't speak about what the voters aren't interested in.
But Douglas, how much weaker is President Emmanuel Macron now than at the start of the week? Should the market still be wary of the prospect that there could be a snap vote, that maybe Macron could resign?
Yeah, so those, the market shouldn't worry. Macron's a recidivist. He's a repeat offender. He's doing exactly what he has done 4 times this year, and that is he has the institutional stability of the French Fifth Republic, which allows him to remain in office for his mandate. He doesn't need a majority in Parliament, and fortunately for him, he doesn't need a majority in the public opinion polls. I think he's polling at 14%. He has promised to remain until the end of his mandate, and he is much hated for doing that, but the market shouldn't be concerned. President Macron's here to stay. More than that, what he gave a sign yesterday after Lecornu went about 48 hours speaking to members of each of the parties who would speak with him was that we're going to have a prime minister. And the other choice was there was going to be a dissolution of parliament and new snap elections. So Macron's learned his lesson. He took a big gamble on the wheel and he lost last year. I don't think he's ready to have another election anytime soon.
All right, a repeat offender. We'll see if he gets away with it. Douglas Yates, Professor of International Relations at the American Graduate School here in Paris. We'll see how the market reacts to this latest development at the Bond Open. But let's get back now to Tom Mackenzie. He's in our London studio with a special guest. Tom.
Lizzie, thank you very much indeed. Yes, very pleased to say I'm joined by the CEO of Invisible Technologies, Matt Fitzpatrick, here in the studio to talk about AI and talk about what this business is doing. You've raised $100 million in the last couple of weeks. Your customers include the likes of Microsoft, Amazon Web Services, Cohere, and just broadly for our audience, what you do is data labeling for LLMs, but you are also working on the ground with enterprise in terms of actually adopting and putting into place these AI systems. Talk us about that proposition, how much demand you're seeing for that kind of solution.
Yeah, so we're an AI software platform. I think simplistically, you think about it, we can bring data, structured and unstructured data together, build custom software on top of that, and then fine-tune models and actually statistically validate them. And I think the interesting kind of history and go-forward view of the business is historically we've served mostly the large language model players. We will, that's going to continue to be a very large part of our business, but more and more we see the same demand set in the enterprise, which is large companies, let's say a bank, if they want to implement Gen AI, they need to make sure their data is clean and organized. They need to make sure the workflow design around it is good, and they need to statistically validate the model at the end. And so actually I see the journey the model builders have been on over the last couple of years being the same one the enterprise will in the years ahead.
At a time where there are these kind of bubble concerns being voiced by some around the AI space, given some of the funding that we're seeing and some of the huge investments involving the likes of OpenAI, Nvidia and AMD, when you look at the enterprise piece, and some of the research has suggested maybe companies are not able to actually adopt and embed this technology as effectively as maybe some had assumed. What are you seeing on the ground?
Yeah, I think the interesting thing is that we are in the first or second inning of the enterprise, in my mind. There's a report that MIT published a couple weeks ago that 5% of models make it to production at the moment, roughly 5%. 5%. There's a report that Gartner came out with, I think, a couple weeks ago as well, that they think 40% of agentic AI projects will be scrapped by 2027 because they don't have a clear pathway to production. So you take that context when you actually realize we're at an interesting inflection point where the models have gone from high school to PhD level in the past couple of years. The model improvement has been extraordinary, but the enterprise is really struggling to adopt that. And so the interesting thing in my mind is, with all this excitement, we're still in the first or second inning of actual realized value.
What are the biggest impediments to that?
Yeah, I think it's 3 things. The first is data. So 70% of the software in the world is over 20 years old. Most of that's heavily fragmented. It's very hard to do Gen AI on data structures that are fragmented and hard to pull together. I think the second one is there's not a clear definition of what a good outcome looks like in a Gen AI context in the enterprise. And I can walk through an example of this, but if you were a bank trying to generate a credit memo on 10,000 of your credits, and I asked you, does that memo generate a good 25-page outcome that looks like what one of your analysts would have generated? There's not really a statistically validated, accepted way to do that yet. That's a lot of what we've spent the last decade doing, but the kind of evaluation frameworks and rubrics you do to actually assess Gen AI. And then I think the third one is actually just organizational and workflow design. The biggest takeaway for me in the MIT report is, of the 5% that are successful, the main determinant of that is the initiatives are led by the line. They're led by the managers, not the IT department. So you have managerial ownership of them and a deep understanding of the workflows. And I think that's actually been the hardest shift in this is, if you're a CEO today, you're looking around and you're saying, who do I bet my major Gen AI initiative I'm going to drive on? I have to find somebody who understands the technology, the process, the people in the organization, and that's been harder than people expected. I think people were hoping this would be a SaaS era where you could just push a button and it would all work, and it's not going to be that. It's going to require real change management. That's been harder than people expected.
What is the priority for you and Invisible into 2026 then? You've raised this capital, $100 million. You're valued at a little over $2 billion right now. The priorities for next year?
Yeah, so we have 6 major enterprise sectors. I think our model training for the LLM is going to continue to be a huge part of what we do. I think we view that as the next 10 years. There's going to continue to be
the
enormous.
Next 10 years, really?
Yeah, I am a believer that actually reinforcement learning and human feedback, human data will be a huge, human-in-the-loop data will be a huge part of model training for the next decade. And then on the enterprise side, we have 6 sectors: asset management, insurance, public sector, healthcare, sports, and food and beverage. And so a lot of our focus it will be on those 6 sectors and continuing to refine our offerings there. We're also entering some pretty interesting new spaces. So, for example, contact centers, we now have our first couple customers. I think that's a really interesting one. Yeah. Because contact centers are one that, if you thought about the ability to interact with a voice agent that will know all of your data, it's an area that a lot of consumers are pretty unhappy with. But it's also a pretty hard thing to implement well, and you've seen some pretty public examples of folks trying it, and like Klarna tried it and rolled it back. And so we think the unique combination of bringing data together, model fine-tuning will be effective for us.
We will watch for that. Matt, we've run out of time. Really appreciate your time, though, in the studio bright and early this morning. Matt Fitzpatrick, CEO of Invisible Technologies. Lizzie, back to you.
Tom, thank you so much. Well, we are looking at futures pointing higher stateside now. All that optimism on AI, it seems, alive and well. We'll get you some terminal charts to set you up for your trading day next. This is Bloomberg. Well, in our last few minutes together from Paris, some charts on the political turmoil here. You can see here how France's budget stacks up compared to other Western European economies. It's expected to have the least balanced budget. And if we flip the board, suspending President Macron's 2023 pension reforms, if that's the price of political stability, isn't likely to help. As you can see here, the reform raises the minimum retirement age in France from 62 to 64, and already it's still much lower than elsewhere. We'll get the market reaction to all of this when French bonds start trading. But if we flip the board one more time, you can see it's notable perhaps how uncrisis-like this week's political drama has been when you look at the oats-bunt spread. 84 basis points is where we left it yesterday. I'm live in Paris throughout the morning. We've got plenty of guests for you to analyse the situation. But up next is the opening trade. Tom, Anna and Guy will take you all the way to the cash open. This is Bloomberg.